Okay, very, very important. One question will be there for 10 to 12 marks. What the planning, how we are doing. 10 to 12 marks. Okay, we are talking about what is very simple. Focus. What are the overall objective and importance of quality management procedures? Now, recently they have added this one, quality management procedures. Previously they are talking about only the procedures. Now you are talking about quality management. Explain the quality management procedures when we are talking in terms of engagement of resources, engagement of performance, how we are talking about monitoring and remediation, compliance, ethical issues. Again, quality management deficiencies. Previously it is not there. Now recently, over a period of few exams, they have added planning and risk assessment in terms of objective and principles, fraud, law and regulations, audit, planning and documentation. If you put the things into consideration, one of the most important thing is audit, planning and documentation. I will not say other things. Quality is also important. Is that quality is important in all the cases. In all the chapters, quality, all the topics, quality is important. But you have to how the audit, planning and documentation. When you are coming to this planning, what is the purpose? Why we have to do planning? See, very simple. You assume you are an auditor. You have given a task to do an auditor for a specific entity. Think like this. You are giving, then only you will understand. You are given a task to do an audit for a specific entity. They will give you assume they gave you in advance 7 days. Is it right? How you will plan the audit, and when you do the audit, how you do documentation. That's very important. When you are going for an audit, you will document everything. You will write whatever is there. Is that everything you will write? You will. What is the purpose? Now you will plan first. But once you have visited the client, you will find something different. Then you will change your plan. Changing the plan according to its requirement, you are making a strategy. You will have an audit plan. You will have interim audit. You will have a final audit. Again, they will ask you the difference between an interim audit and final audit. You will have the fraud, laws and regulations, quality management and documentation. I will never say it is a difficult one. It's the way you have to understand slowly. Read the concepts wherever it is possible, focus on it. What is the objective of an auditor is to plan the audit so that they can perform in an effective manner. Simple one. Why you are doing planning? We want to plan it to make it an effective manner. What is the standard ISA 300 planning and audit of financial statement? This you on a separate page, keep it memorized. Few ISA 200, ISA 260, ISA 570, 300, 315. Fingertips, I will not say more, I will say maximum 8 to 10. These 8 to 10 you understand. When you are talking about the planning, the audit, ISA 300, planning and audit of financial statements. Simple things, at least simple things you make it happen. Audit is complex, audit is risky, audit is expensive. Although firms have internal manuals and standard procedure, it is vital that engagement should be planned. Companies are very clearly, they have the manuals, they have the procedures, but engagement you have to plan the visit or have to wait. What is the benefit for you? We are talking only from the auditor perspective. You are an auditor. This is what you are doing. Benefits of planning to whom? Benefits of planning to the auditor. You can, if you plan, you will give an appropriate attention to important areas of the audit. If you plan, you can identify and resolve potential problems on a timely basis. If you plan, you can organize and manage the audit so that it will be effective and efficient. Seem nothing is there. Don't say that it is something which is out of the box. Same thing. When you plan, you will select the team members. You know the capabilities and competencies. What are the skills you want? You are going for a audit with respect to airlines. Okay, you are doing an audit for an airline company. Is it? Then you will think what is experience. You know the people who have done the audit for airline industries. You will take those people into your team. You are doing for automobile, you will take the expertise of banking, people who are experienced in bank audit. Likewise, you create your team. You will direct and supervise the team, and you also review the work. Effectively, you coordinate. You also not only direct and supervise, but also you what the work done by others. Who are the people others? Some what called as experts. Some are internal audit. Okay, this is the benefits of planning. Okay, this is the benefits of planning. I am giving you very, very clearly. Is it? Remember, understand. Planning, if you are doing the auditor is doing a planning, that the auditor ensures that the risk of poor quality audit is reduced to a acceptable level. You are not only want to complete the audit, but also you want to do the audit with quality. Okay, you want to do the audit with quality. Okay, now this is what has been added. Is it? Now, when you do the things, how you conduct the audit. Okay, very simple, very easy. Think the most important thing that you are a auditor. Khalas. Things will be very, very specific. In order to achieve the objectives of the auditor must conduct as per the standards. Auditor ensure that auditor is fulfilling all the responsibilities. Fine. Allow a user to have as much confidence in one's audit opinion as another, and thereby rely on one audit set of financial statements. Means you have to have a confidence. Okay, you have to confidence of one's auditor's opinion. That's yes, I am going to rely on the auditor's opinion. Trust has to be there. Ensure that the quality of audit internationally is maintained at the highest standards. Is that quality is very, 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 very subjective word. Okay, very, very subjective word. You cannot define quality, but what is the highest standards? Provide a measure to assess the standard of auditor's work. Provide a measure to assess you have to have some standard, some benchmark when determining their suitability as a authorized practitioner. They should also appreciate, yes, you have done the audit, this auditor is very effective. This auditor is, I'm not saying we should not be supportive, don't take supportive, helpful, or more coordinative in a negative way. See, you have to make sure that you are there to improve the things that is not as per the standards. You have to guide them, you have to tell them, you have to make suggestions, you have to give your opinion, unbiased opinion, fair opinion, so that the system should be improved. Is it? Whenever you are doing an audit, always professional skepticism, questioning mind in a positive way. Always, whenever I come to this word, I will say you question them in a positive way. You should not question because you have to question. Auditors required to perform audit with an attitude of professional skepticism. What we have covered this is that you have to question them. Inquiring mind in itself is not sufficient. You should think what may go wrong. The auditor must use your professional judgment. What is the professional judgment? First time you are talking about the professional judgment here. Okay, what is the professional judgment? Is the application of relevant training. Okay, you should have your own, you have training, you have the knowledge, you have the experience, making the decisions to be informed. You have to inform them what are the things you are doing, about the course of action that are appropriate in the circumstance. What is the professional judgment? Whatever you are doing, you should take your knowledge, experience and training, and you have to keep them informed that I am doing this. That is the reason. Whenever you do, you will say these are my assumptions. Other people should understand what you are doing. Then only it will make the things clear. The use of risk-based approach, this we will cover in detail. Risk-based approach require risk-based, based on the risk. If the risk is high, you have to be more active. If the risk is less, it will not. It is right. Means some organizations are very structured. The risk is less. Okay. Some I will write. Some organizations, some entities. Is it right? Some entities are very structured, rule-based, okay, very structured. You have a clear manual, you have a clear procedures. Is it? You have a clear manual, you have clear procedures. Automatically the risk is less. This is called as a risk-based approach. Some companies are not very unstructured. Okay, very unstructured. Okay, very unstructured. You will not get reply. See, in the market, every type of entity will be there. Very unstructured. Then what will happen? Definitely the risk will be very, very high. This process is called as a risk-based approach. Requires skill, knowledge, experience and an inquisitive, open mind. Means you should make an inquiry. You should ask the questions where the risk is more. You have to think out of the box. Is it? You have to think out of. You have open mind. You should not go to the audit and say that yes, what he will do. No. You go to the audit, there you see, understand the environment, understand the work. You should not say that I am going with a predetermined mind of X or Y. Is it right? Now, you read this one. Okay, you read this one. Now, what is the planning process? Planning process are number of elements. Okay, these are, see, if you are doing it, I am going to start question and answers first. Is it? Question and answers first. From next week onwards, I will exam kit. I will take the exam kit. I will solve the exam kit before you. Then you will see how the question answers will be. Planning consists of number of elements. You have a preliminary engagement activity. Initially, is that planning consists of initial engagement, performing procedures regarding the acceptance and continuation of the relationship. First, what is the preliminary? You should accept the job, engagement, okay? Continuation, if it is renewal, is it that if it is continuation, your contract is renewed, you should make sure. Evaluating compliance, we have to follow the ethical requirements. We have covered in chapter 4. Is that we are covered in chapter 4, the ethics. Ensuring no misunderstanding with the client as per the terms of engagement. Clear will be that they should provide all the information. Is it right? They should provide all the information. Is it right? All the relevant information. Is it? All the relevant information. Related to what? Related to financial statements. All the staff should be available. Who are the people? Okay, who are the staff available? In other words, those charged with governance. These are the terms or conditions. The preliminary engagement activities covered. We will cover. Is that covered in the ethics and acceptance in the last? Preliminary engagement means how it has to be accepted, what is the ethical procedures you have to follow, code of ethics, threats, what are the things. We have to be very careful. Before we take up the job, preliminary, we have to make sure that every terms and conditions are clear. Then you have to develop a strategy and develop a plan. Is that develop a what is the audit strategy and audit plan must be documented in the audit working papers. I told you before that I will tell you about working papers at a later stage. Working papers are the papers where the auditor will prepare his personal notes. Is that whatever we are talking about, the strategy and the plan should be in writing. Those should be in working papers. In the question, they will ask, what is the importance of working papers? Is it right? What is the importance of working papers? I am putting a star mark. So many star marks I will put. Okay? Working papers. What is the strategy? It will be scope, timing and direction. What you have to do, what time is the duration and how it has going to be directed. What are the tasks to be done. The diagram summarizes some of the matters. I'm just making it more bigger one. Okay? More bigger one. Is it? What are the things? Reporting objectives. Reporting. We should know timetable, communication with the client, communication with the team, communication with the third party. Simple concept. Nothing is difficult. Very simple, very organized. When you are talking about what is the reporting objectives, you should know that timetable, you should know who is your client, communicate with the client, communicate with your own audit team, communicate with the third parties. Third parties means the banks will be there, suppliers will be there, vendors will be there, all the third parties. Okay. Now, significant factors. Preliminary engagement activities, gain knowledge or othering. What is the significant factors? You have to think about the materiality. We have done performance materiality. Is it overall materiality? You have to assess the risk of any material misstatements. Audit risk, we have done. Any material misstatements. You should have a professional skepticism. You have to think something different. You should understand internal controls. You should have what are any developments have happened recently with respect to the industry. Is it with respect to the company as such? Any new directors came, any new contracts came, any new projects came, any new event has been happened. You should significant developments. any laws has been changed by the government with respect to that specific industry or company, any changes in the accounting standards. See the thing, you should cover this. I told you previously we have IS 1. Now from 2027, 1/1/2027, it will be IFRS 18. This is the changes in accounting standards. We have to be very clear. Already they started assessing in SBR and FR. Is it that when you are doing SBR, you will definitely you will know IFRS. IS will be replaced by IFRS. In the similar way, IAS 18 is replaced by IFRS 15, revenue from contract. You should make sure what are the replacements that have been happened. Okay, we have IAS, you have IFRS 9 is there and IFRS 7 is there. Means you should understand. More importantly, keep an eye on this. Keep an eye on this. You should be very clear. In most of the interviews, what I got feedback from my students, they are asking very straightforwardly, what is IFRS 18? It will be implemented from January 2027. This you have to know. What is the selection of a audit team and what you have in other place? What is there? You have this will be more selection. A good team, experienced team, knowledge. Is that they should have a good knowledge, they should have a good skills, they should have a good experience. Okay, now characteristics of the framework, what we have to do, what we should not do. We have to think about the industry also. Which type? Telecommunication industry different, automobile industry different, software industry different. Okay, you are talking about the hospitality industry different, tourism industry is different. You should know the industry. Knowledge about the business you should also know. Which business they are doing. Is the internal audit function, whether it is a service organization or manufacturing organization. Any automation is there. Is there any? Now you see, you are talking about all the automation technology, we have to think how much they are dependable on that. Timing of the audit work, and most importantly, the client staff should be available with them. When you are going to the audit, the client staff should not be on leave. That is the reason whenever the auditor will visit, they will not allow us to take any excuse. This is the strategy. You should have the reporting objectives, you should have significant factors, nature and timing, and characteristics of engagement. The audit strategy allows auditor to determine what are the nature of resources. Nature of resources, team or human resources, technology resources, intellectual resources. Experienced team members. Okay, in some cases, what will happen? Assume you are doing an audit for a bank. When you are doing an audit for a bank, you are doing an audit for a Islamic banking. Then you should have you should take the expert, third party expert, a person who is expert on the Islamic banking. You have to take his services to perform or to have any opinion. You can engage him for that work. Specifically, experts. Any legal opinion, you have to engage legal experts. Any foreign transactions, you have to engage. any specialist you have to engage. The amount of resources, number of team members. You should not give an excuse that I am having less number of members. When you are going to resource, is that you have time element, is it right? You are doing an auditing spread over 1 month. Initially, how many people are required? First week, second week, third week, and fourth week. How the resources are directed supervisors include timing, meetings, whatever the timings of meetings, when we have to meet, audit team, I'm talking about the audit team, how we have to brief ourselves, debriefing, and what is the manager's review. Simple. By the time you complete this chapter, you will get a complete understanding about what you are doing. Now, how you have to do a audit plan. Okay. Now, simply and specific. Okay, simply and specific. Once you have done a strategy, what is the strategy you are doing? You are talking about the strategy in terms of resources, in terms of time, in terms of deployment, and in terms of supervision. Once you have done this, okay, you will create a plan. Simple. How we do the things. We are planning an event. Okay, you are planning an event. You are doing the things. Definitely, what you will do, you will say that how you have planned. Every time we will do the things. Once the next stage is to develop a specific, detailed plan, day by day. Okay, task by task, to address various matters. The strategy talks about overall approach, whereas the plan talks about the specific one. The plan talks about the operation details. The audit plan should have a specific, very specific. What is the nature, timing, and extent of plan, which is direction and supervision. What you are doing, how much time it will be take, inventory audit, how much, bank financial statements, how much, bank statements, how much, plant and machinery, how much time is taken, what we are doing in plant and machinery, how much sample you are taking, okay, how much sample you are taking, which things we are covering, very, very specific. The nature and extent of how much risk assessment procedures we are working on in terms of analytical procedures. Is that analytical procedures? Is it right? In terms of substantive procedures. Is it? In terms of substantive, everything, how we are going to conduct. Okay, risk assessment. If the risk is high, if your materiality is beyond what we have said, the materiality is that I am writing very clearly everything. If you say the materiality is 5%, you determine, but the materiality is going to be more than 5%, it will be 7%. Automatically, you will change your risk assessment. You will increase your sample size. Was that right? You are increasing the sample size. This is what we have to plan accordingly. If you need any further procedures, is there any further if you need to do something further audit, what you have to do, who should do, how much should be done, sample size, when the work should be done, whether it is an interim audit or it is a final audit. They are two different things. There is an internal audit is different, interim audit is different, final audit is different. Interim audit and final audit go side by side. Internal audit is different. Any other procedures we have to do, we have to plan. Means you should be very clear plan, audit plan. It should be documented. The relationship between audit strategy and plan. They will not ask you this, but they will ask you this. If you want to understand, do the question answers with understanding, you have to do this. Memorization will not work. What is the strategy? Strategy scope. What are the items you have to do? How much you have to cover? It will give you a direction of audit and determines its developments. You say that you are going to have you will say that yes, this is the scope of the audit. This is the areas which we are going to cover. See, in the final audit, you will not cover each and everything. You are going to focus on closing balances. Is that you are going to focus on the sample size. Then you have to be very, very selective. Very, very selective. Okay? That is what we are talking about, the scope. Increasing level of detail. If you are increasing, going in depth, okay, going inside, is that in detail, then it is called as a plan. Shows how the overall strategy will be implemented. Means strategy is the scope or plan is, that's why they say this is the operational details. This is your scope of the audit. Strategy and plan. Only focus. What you have to do? We have to have a clear understanding between the audit strategy and audit plan. Are you clear about this?
Yes, doctor.
Fine. Now, where is Ali? Ali and Aisha is not there. Okay, they have to come. They have to. Ilyas, next time it is your responsibility to catch up and motivate Ali to come.
Inshallah, sir.
Is it right? Everybody has to follow one another. Keep it in mind. All 6 are same. Okay, I want to make sure that all 6 should be passed, inshallah. That's my target. And you see the difference, how much it is going to be there. You have to motivate yourself, you have to understand yourself. Next, coming back to slowly and steadily I am doing the things. Okay, now what is the interim audit? See, understand the concept, that's very important. Memorizing doesn't work. An auditor must consider the timing of procedures whether to be carried in an interim audit or a final audit. Whether you should do something in what are the things you will audit in interim audit, what are the things, what are the procedures, what are the tasks you will take up in the final audit. You have to be very sure. For an interim audit, the client normally needs to be sufficient size. Because, see, interim audit, okay, sufficient size. Because you should also think in terms of, you have a cost, is it right? What will happen? The client needs to be sufficient, means how much you are going to work it out. Interim audit should improve risk assessment and final procedures more efficient. See what you are doing in interim. See, when you do the interim audit, you will get an idea. You will get an idea about the risk. It will help you in the final audit. If you think in the interim audit the risk is high, then you will be more cautious in the final audit. More careful. Is that you will be more careful in the final audit. Is that this is the way it happens. It is important to note that interim and final audit are 2 stages of the same audit. They are not different. Interim audit and 2 stages. First interim, then final. One set of financial statements audited, one audit report will be issued. In the interim audit, you are going to have the auditing. In the final, you will issue the statement. The audit work, however, is performed in 2 stages. Some work before the end of the year and some work after the end of the year. Interim audit before. final audit after the year. That's all. Now you got the complete understanding about interim audit and final audit. Is it? You got the complete. Now the same thing they are going to. What is the interim audit? Completed partway through client's account before end of the year. Is it? Early enough not to interfere with year-end procedures. Some are specific, closing balances. We'll do in the final audit. Is it right? They give you, is it procedures, client to give adequate warning of anything you will come across, any issues, you are going to caution them that they need to be addressed in the final audit. In the interim audit, you find any risk associated, then you caution them that before final audit, rectify this. Late enough to enable sufficient work to be done to ease the pressure of final audit. Is it that if you do interim audit, you will not find pressure on the final audit. It means you are not, now you see the things. People are doing, as I will tell you about you. You started your preparation from now onwards. Before examination, you will be relaxed because you know what to do, what not to do, where to work, where should not work, what are the difficult things. People will do the things just before 10 days before the examination. It will not work. That is the interim audit. Whereas final audit takes after the year end, after 31st December. This is before 31st December. Enables the financial statements with relevant authorities by required deadline. There will be a deadline for the final audit, no deadline for interim audit. Generally, client would not want the auditor to perform the audit at the year end. This will cause disruptions for client year-end procedures. Means that activities, the procedures of final audit will be different. The procedures for interim audit will be in terms of timing. What is the purpose? Allow the auditor to spread out the procedures more effectively at the planning. The more effective planning means you are giving space for yourself. Useful when there is a increased deduction risk due to the tight reporting deadline. Final audit, you have to make it by 30th of April. Final audit should be approved by the shareholders, signed by the auditors, directors, approved by the shareholders, everything. Now, I will give a simple example. You will have, every company will have a unaudited financial statements. You will have a audited financial statements. I am not saying specifically, but unaudited financial statements are with respect to interim audit. Audited financial statements is with respect to the final audit. In simple understanding. Okay, now. What is the work performed? Okay, what is the work performed? In interim audit, documenting system, you will document, you have enough time will be there with you, no deadlines. You will document the system, you evaluate the controls, is that you evaluate the controls. You are testing specific and complete transactions, purchasing new current or non-current assets. You will do complete things. Is it doing it? Testing transactions of sales, purchase, payroll, addressing the risk will affect how to conduct at the final audit. You are assessing the risk that will affect work at the final audit, and you will also attend perpetual inventory count. Any idea about this perpetual? Perpetual, continuous. There is perpetual, there is periodic. You will attend continuous count is there. Is it right? Continuous process, production process is there. Is it? Production process is there. When it is a production process, is it right? There will be inflow and outflow will be there. Is that there will be an inflow and outflow will be. You have sufficient time. If you have the sufficient time, you will. Perpetual inventory is very difficult. Is that the process is continuous. You have to be watched closely. You have to have very effective controls on that. But interim audit, you can have a perpetual. You can attend the perpetual inventory counts. Are you clear about this? This is what it says. Okay. What are the things? There is a timing. There is a purpose. There is a work performed. In the work performed, final audit, you are auditing what? You are auditing financial position balances. Closing balances specifically. Is that you are talking in terms of closing balances. Transaction testing for transaction that have occurred. See, you have done interim audit. After interim audit, any transactions happen, you will test. Okay? Because till interim audit it is done. Testing of year-end general entries, which have any adjustments are there to transactions. Obtaining evidence that the control tested at the, if you have any evidence of the test of controls, you will get the evidence. You will get the evidence during the period after the interim audit took place. Completion activities such as in the final audit, this is very important, going concern, ISA 570. We will cover this somewhere in lecture 9. Okay, very important. ISA 570. Going concern, they will ask you in examination. Completion of activities, going concern, and any subsequent event reviews. Okay, you will overall review of financial statement, any communication with the management or those charged with governance. Okay, now what I will say, when you are revising it, revise. Okay, I am putting 2 stars here. Revise, don't memorize, because memorization will not work. You have to write in our own words. Difference between interim audit and final audit. Simple. Interim audit before end of the year, final audit after the end of the year. Is it? Interim audit, we don't have deadlines. Final audit, we have deadlines. Interim audit will go detailed procedures. In the final audit, we will do the after the year end, closing balances. Interim audit, we have a clear-cut evidence, test of controls. Deadline, it is a, we are going to work with the procedure that is going to be done before the final audit. In the final audit, whatever is done till the interim audit, any recommendations, we will take up those things and see whether they have done it or not during the final audit phase. What they say, there is the 3 things are there. Okay, the timing, the purpose, and the work performed. Are you clear about this?
Yes, doctor.
Okay, now, when you do the interim audit, what is the help, what is the advantage you will have in the final audit? Now you can tell on your own. You don't need my assistance also. When you are doing an interim audit perfectly, definitely your final audit will be easy. If the controls are tested interim stage provided evidence, control risk is low, fewer substantive procedures can be performed. Substantive procedures means in detail. Substantive, the name itself says, is it right? Means you should get a suitable and evidence. Okay, you have to substantive in detail. If the controls are tested in interim stage provided evidence that control risk is low, then fine, you will do lesser substance. You are convinced in interim audit, definitely your task in the final audit will be easy. If the substantive procedures are you have done in the interim stage, you have to do a fewer procedures in the final audit. Means if you are done in the substantive procedures in the interim audit, the final audit will be done in less time to perform. If the auditor report is signed to the closer end of the year, resulting more time reporting to shareholders. You have done, you are planning the things. You are not doing, if you are done interim audit, and automatically you can take a little time for final audit and you can sign your audit report well in advance and you can give time to the shareholders to review. Interim audit identifies area of increased risk. Controls are found not working effectively. If in the interim audit you find there is a high risk, then you will do more substantive procedures. Is it right? Now, listen, if the controls, what is the advantage, impact? If the controls are tested in the interim audit, then less substantive procedures can be performed in final audit. If the substantive procedures are performed in interim audit, you will take lesser time in the final audit. If the auditor is signing the report closer to the year ending, then the shareholders will get a good time to review. If there is an increase, you identify increased risk in the interim audit, then in the final audit you will go in detail substantive procedures. Now you can understand, nothing is there something which is not. If you do interim audit, it will help you. Means planning the work is very, very important. Planning in advance. Are you clear about this? Fine. Are you clear about this?
Yes, doctor.
Now, this is not done. Okay, this much is there. What is there? This much is there. Now you have the thing. What we have done? We have done the audit strategy. We have done audit plan. We have done interim versus final audit. Now you will only tell. This is the most simplest way of understanding the subject. It is not difficult. Divide the things. Audit strategy, audit plan, difference between interim audit and final audit. When you do this, what is the fraud and what is the error? Very simple. If you do intentionally, sorry, I am saying if you do, I am not like that. I'm just saying, if I do intentionally, I will take like that. If I do intentionally, it is a fraud. If I do by nature, it is an error. Fraud and error. Responsibilities, assessment, response, reporting. As an auditor, if as an auditor you find any fraud, Then what is the responsibility as an auditor? How you have to assess that fraud? What is the response from the management and how you have to report? As a auditor only. Misstatement in the financial statement can arise either through fraud or error. But we have to make a difference. What is the fault? The distinguishing factor is whether an action resulted in the misstatement is intentional or unintentional. If it is intentional act, purposefully you are doing, it is a fraud. One by more individuals, management, those charged with governance, employees, third parties, in use of deception or obtain unjust or illegal advantage. Write down this on a separate page. I'm sending this ISA 240, responsibility of auditors to fraud in the audit of financial statement. When I am repeating again and again, by the end of October or middle of November, you will find ISA. If I say ISA, you will tell me the ISA. That's all. Okay, that much I will prepare you. It means how much closely I will monitor this. Is that if you are doing intentionally by one or more persons, management, charged with governance, employees or third parties, unjust or illegal. Fraud can be two types. Okay, now little bit careful. They will ask you differentiation. What is the different types of fraudulent reporting? Financial report, deliberately, intentionally misstating the financial statements to the company performance. Is it right? Look better or worse. Intentionally, deliberately, intentionally. Is right? Misappropriation, theft of assets, company asset, especially which one we are talking in terms of cash or inventory. Especially, okay, fraudulent means you are deliberately misstating the financial statements, either positive or negative. Misappropriation in terms of cash or inventory. That is the reason inventory is very, very important in audit. Very important. In future, the moment you go to I will give a simple example. Assume you are going audit with respect to any bank branch. The first thing what you will do, you go to the teller or you are going to the cashier or you are going to a cash head. Is it right? You will take what is the cash as per the register and you will compare with the physical cash. The registered cash and the physical cash should be same. Immediately you will sign and the client will sign. Auditor, and this is a document. This is the document which you are going to, means the moment you think about the inventory, that is the reason, cash or inventory. Is it cash or inventory? Both are misappropriation. This is one of the first thing you will do is you will see what is the physical cash and what is the registered cash. Error. This is with respect to fraud. Error is unintentional. Financial statement. What is the error? It may be omission of the amounts or disclosures. You are omitting, is that? But we have the controls. Understand? But you have a good controls on that. Is that you have the omission by mistake. What we'll do in order to avoid this, what we'll do, you will put a sequence number. This is the control. is that you put a sequence number. You will put it is a computer generated invoice number. Okay, computer generated invoice number. Automatically what will happen? There will not be any omissions. Okay, there will not be any omissions. Okay, a mistake in gathering, processing which financial statements are prepared. It will happen. There is nothing like that. There will not be 100% error proof. There will be mistakes will be there. An incorrect accounting estimate. Is that you are not having a estimate of provisions, estimate of the depreciation amount. Incorrect. You have miscalculated. It happens. A mistake in the application of accounting principles. What are the principles? Measurement, recognition, classification, presentation, or disclosure. We have not done, okay, most of us have not done financial reporting. Chapter number 14 is financial reporting revision. I will take that somewhere in next week or after next week. Financial, what is there? Every standard, I take IAS 2. You have a measurement, recognition. First it is recognition. Recognition, measurement, classification, presentation. Every standard. You take IAS 16, IAS 38, anything is there. You will have that. Means you have, instead of putting in IAS 16, you have put it in what? You have put it in IAS 40, investment property. Is it? Property, instead of putting in property, plant and equipment, yeah. Instead of using the cost, you are using the fair value. We are not talking about all those things. Just I am giving you an idea. You should have measurement, and most importantly, you have to have a disclosure. Sometimes it happens because of inexperienced accounting staff. Is it? Now, what we are doing, when we are doing this evaluation, write down this and send me the screenshot, what you are doing. Either you can type it in the Word file, nothing will happen. If you type in the Word file, follow the sequence. ISA 450, evaluation of misstatements identified during the audit. That's all. Okay, now you understand what is the fraud and what is the error. That is intentional, this is unintentional. That is a collaborative, that is between that is done by more than one people. One or more than one people. This is done by an individual. Is it? This is the difference between a fraud and error. Read, understand. I'll come back to this. What is the director responsibility in terms of the fraud? What the director's responsibility? The primary responsibility of detection fraud is with the people who are charged with the governance and the management. Responsibility is whom? It is not with the staff. It is responsibility with the people who are charged with governance and the management. What you have to do in order to remove, in order to overcome, you should have an effective system of internal control. Segregation of duties. Implementing, reducing opportunities for fraud to take place. You have to reduce the opportunities. Creating a culture of honesty, ethical behavior, and an active oversight. You have to think long term. You should not think about the short term. Image, what is the most important? Most important is you should have an effective control of effective system of internal control. That's all. The director should be aware about the fraud and they should think about the element of risk assessment. The audit committee should review these procedures to ensure that they are in place and work effectively. This is the function of an audit. Function of a audit committee. Is it? How you are reducing the fraud? We are reducing the fraud with the involvement of internal auditors. Management is responsible. Who are responsible for fraud and errors? It is this much you should understand. Who is responsible? It is the management who is responsible for fraud and errors. You should have an effective system of controls, internal controls. Is right? An audit committee will review these procedures. Is it? Audit committee will review this. What the internal auditor will do? Internal auditor helps. This is the people who have been appointed. Appointed by whom? Appointed by the management. Internal helps management. They help management responsibilities in terms of fraud and error. What internal auditor will do? Understand this. Nothing is there. They will test the effectiveness of whether controls are effective or not. Verification, approval, segregation of duties. Most important, it is the segregation of duties. This is nothing but the controls. Example of control. Is that at preventing and detecting fraud and error. And any internal auditors will give recommendations for improvement. Internal auditor perform investigations. What is how the fraud has committed, what is the extent of the fraud, and they will give you recommendations how fraud could not happen again. Internal auditors perform surprise assets counts. They will have surprise tests. Okay, surprise asset counts. The asset count means assume surprise internal auditor. If you take the banks, if you take any big companies, they say that I am working with internal audit. They will say that yes, I have went for an internal audit to some other place. Means internal audit will also assist the management. They will give surprise checks. They will see any misappropriation. What is the misappropriation? Misappropriation in terms of cash and inventory. If there are internal auditors, it will be deterrent to fraud. Fraud and error can be reduced. Okay, fraud and error can be reduced. This is the what is the internal auditor will do? Internal audit will test the effectiveness of controls, what happened. They will have a surprise checks, surprise counts, and they will help to reduce the deterrent to fraud. See the thing. What they say, the first one is director's responsibility. The second one is internal auditor's responsibility. The third one is external auditor's responsibility. See the flow. See the flow, how it is coming. Everything, I am putting it in a different color. Okay, I am putting it in a different color. Director responsibility, understand what is the director's responsibility. What is the responsibility of an internal auditor? What is the responsibility of external auditors? See, what happens, most of the people, how they teach, they say that yes, this is external auditor, it is important. They will not say the flow. If you understand the flow, you will know that directors are overall responsibility. The internal auditors will help the directors to reduce the fraud, and the external auditors will, what they will do? External auditors assess the material misstatement. As external auditors will respond to the assessed risk. They will say that this is the risk element. They will assess how much is the risk attached to it. Materiality. What they will do? They will focus on the materiality. Three different aspects. The role of the directors, the role of the internal auditors, and the role of the external auditors. what the external auditor will do, see, external auditors, they will obtain reasonable assurance that the financial statements are free from material misstatements. We have done so many times, whether it is through fraud and other. What is what is the role of the external auditor? To obtain a reasonable assurance that there is a free from errors. The external auditors will have a professional skepticism. They will remain alert, possibility that fraud could take place. External auditors think what may happen, what may not happen. They want to identify anything has suspicion. This means that auditor must recognize the possibility that material misstatement due to fraud could occur. Okay. Now you see that external auditor, see what will happen. Is that external auditor consider the potential that management override of controls and recognize that procedures. Consider that maybe management is not that much effective. They will see what are the audit procedures which you have to perform for a effective for detecting error. Is that effective for may not be effective for detecting fraud. See, fraud, what will happen? In order to detect the fraud, you have to very sharp, very focused, and it is you can identify error. By identifying a fraud will need extra experience and skills. That is what the external auditors will do. How they will identify, how they will do this, they will follow some procedures. Is it? Now, what they say, discuss the accessibility financial statements to material misstatements to the fraud with the audit engagement team. As a team, you should discuss what will happen. At the end of the day, there should be a debriefing. You should share your experiences. Yes, this has been happened, this is not happened. Automatically what will happen, it makes, once you have a discussion, it makes things more clear. The discussion should consider incentives to commit fraud such as profit related bonuses. Isn't it? Or applications for finance. Is that there will be chances, anything profit related bonuses are there. That will lead to fraud. Opportunities to commit fraud such as ineffective internal controls. See, in purchase department, you will have good control. Whereas in the inventory department, there you don't have any good controls. In the sales department, in the receivables department, if you have purchases, you will have to think about the payables also. Means you should understand, your team is working in different departments. Automatically you will share the experience. Then you can understand whether there is a possibility of fraud or not. Ineffective internal control. Management or attitude. Disputes with the auditor over auditing matters or failure to remedy known deficiency. Non-cooperation from the management. You can sense that there is something wrong. Inquire management about the process for identifying and responding to the risk of fraud. How the management is responding, how the management is treating, there is any fraud is there. Inquire, we are only inquiring the management, internal auditors charged with governance, that they are have any actual or suspected. This is the word which always gives you a good understanding. You have to always inquire. You have to discuss with your team. You have to inquire with the management or those charged with governance. Consideration of relationship between identified during when you are making an analytical procedures. What is the you are talking in terms of sales. Sales will lead to credit sales. Okay, credit sales will lead to what? It will lead to receivables. Receivables will lead to cash. You should know what is the sales, what is the reconciliation. Automatically, what this is the analysis. What happened last year? What is happening this year? Is it what happens last year? What happens this year? You are analyzing what is the percentage of ratio last year? What is the percentage of ratio this year? Is it? You are analyzing analytical procedures. Automatically what will happen? If there is any fraud, it will be easy to detect. Responding to when you have any risk assessed, the following procedures must be performed. Review, what we have to do? Review general entries. Very important, debit and credits. This is the point where people find it difficult. If you are good in debit and credits, you are good everywhere. Identify any manipulation of figures. Again, inquire with those involved in financial reporting. Any unusual activity. Select some general entries and adjustments, especially made at the end of the year. Is it? At the end of the year, you have to be cautious. Is it right? At the end of the year, you have to be very cautious what happens during the last 15 days before 31st December. Consider the need to take general entries throughout the period. Consider, very difficult, but think, if there is something wrong in general entries, you have to take it. That is the reason. I don't know how many of you are in auditing, but when you are, even after completion of ACCA, when you are joining an audit firm, they will put you in only general entry, debits and credits. If you are reaching the senior most position also, you have to be good in debits and credits. Are you clear about this? Okay. Now you understand. Okay. Now, Alhamdulillah, you understand the complete concept of a planning. What is the fraud? What is the error? What is the responsibilities of the management? What is the responsibilities of the internal auditor? What is the audit strategy? What is the audit plan? Fraud, errors. Is it right? Now, what is the most important major part is the external auditors. Is it? What the external auditors will do? They review management estimates. They review, they evaluate what is the judgments, what are the assumptions the management has taken. You have retrospective review, you will go backwards. Backwards means you are talking in terms of what we'll do, we will have any consistency. You will say what has been done. We don't use last year. Always use prior year. Don't use last year. I have used it. I should not use. Okay? Prior 15 days. Is that? Here also I have used. I realize now. Is that I should not use last. I have to use prior year. Prior year with the current year. This is the language of auditing. That is the reason we are using. Is that prior year? Is that perform retrospective? Okay, any judgments. Review transaction, all outside normal course or any triggers are there. Is there any triggers are there? Something happens here, some expenses are there, some income is there, then it will go. Then you will see why it happened like this, why it is happened like this. Auditors, again the most important point, everywhere it will cover, obtain written representation from the management and those charged with the governance. Remember this, memorize this sentence. By the time you will complete, you will come across so many times. Obtain written representation from the management and those charged with governance about the responsibility of internal controls, about the have disclosed to the auditor the results of management fraud risk. You have whether they have disclosed it or not in writing. Disclose to the auditor that known or suspected frauds. Don't rely on oral. You have to take in writing. Disclose to the auditor any allegations of fraud, whether they have disclosed it or not. Is it? You have to take. See, again I will say in the beginning, if you are taking from the management, it is internal source. Internal source is weak evidence. If you are taking external source, it is a strong evidence. I will cover this again. Why I am telling you this? The moment I will cover in the next stage, you will have more clarity on that. Any internal assurance, right, internal source is weak, external source is strong. There is unavoidable risk that some unavoidable risk that some misstatements may not be detected. Fine, we cannot say. That is the reason we say it is a true and fair. We cannot have, we are working on a sample basis. Is it? In accordance to the ISA. The ability to detect fraud depends on the skill of the perpetrator, collusion, relative size of amounts manipulated, and seniority of the people involved. Fraud is a little bit difficult. In order to detect the fraud, we have to be very, very sharp. Auditors. Now, if the external auditor identify the fraud, is that if the auditor identify, they must communicate. Is that they first what you have to do? They must communicate matter to the appropriate level of management. If the people in the management involved, suspected fraud involves management, then they should not report to the management. The whom they should report? They should report to the charged with governance. If the auditor has doubt without the integrity, this is the code of ethics. What are the 5 code of ethics? Tell me fast. Anyone? What are 5 code of ethics? Otherwise, I will ask specific person.
Board responsibility and company purpose.
Pardon?
Board responsibility and company purpose.
No.
That is 1.
No. Code of ethics. Integrity. Integrity is 1. What are other 4? Tell me.
Objectivity.
Good.
Confidentiality.
Good.
Professional behavior.
Good.
Professional competence and due care.
Yes. I will ask anytime, anything. Anytime, anything. Okay, what we have covered it. And next time I will ask specifically with specific person. Okay. So everyone has to be prepared for that. The auditor has doubt about the integrity about those charged with straightforwardness. They will have to seek legal advice. In addition of this responsibility, the external auditor must also consider the responsibility of the report. Either we have to occurrence or suspicion to the party outside that. Maybe some people, external people also have done. While the auditor does have the ethical duty to maintain confidentiality, see the thing. Almost what happened? Here we are talking about integrity, here we are talking about the confidentiality. Very easy, dear. This paper is, you cannot imagine. This paper you covered within 3 months, it is a piece of cake. ACCA is not difficult. I am telling it on record. It is only the way you should plan. It is not difficult at all. Trust me. When the auditor does have an ethical duty to maintain confidentiality, it is likely that any legal responsibility will take the precedence. Means anything is happening, you take the any legal responsibility. You have the right to seek the legal advice. Means you find it that management is not cooperating, you find that things are not happening, confidentiality, you have the legal, understand, you can do your question answers on your fingertips. Okay, you can seek the legal advice. If fraud has a material amount, materiality, the audit opinion should be modified. If there is any major amount involved materiality, then you have to modify the opinion. When the opinion is modified, the auditor will explain why it has been modified, and this will make shareholders aware about the fraud. If you find there is a materiality, then you have to modify modify, unmodified, fine. Modify means there is something wrong in that. Are you clear about this?